Hey guys, Mike here. So, oh boy, what a timely video I did yesterday, because boy, the market was kind of a mess, right? I mean, what did we say in the video yesterday? I don't know how Credit Suisse is still, in business. Look at these credit default swaps, and then what happens? I mean, just a hot mess. So, pure luck on what time the video got put out. I wish I would put it out 2 days ago. But, again, the banking system right now, it's rough. Not just here, right? All over the world right now. And so, we're going to get into all the stuff, the timeline of what happened, because you might have noticed there was a recovery at the end. What happened? I don't understand. How did that happen? Well, first of all, let's go ahead. And by the way, I'm going to also give you an update at the end of this on how we're doing as consumers. That might surprise you, by the way, okay? So just FYI. Now, stuff that probably would have brought the market up was, one, retail sales not so hot, minus 0.4% versus minus 0.3 estimate. That's neither here nor there, okay? The biggest thing was core PPI and then regular PPI, right? So core PPI come in under, right? Really nice report, 0% versus estimate was 0.4%. On the plus side, PPI month over month, negative 0.1% versus positive 0.3%. PPI year over year, 4.6% versus estimates of 5.4%. That normally would bring the markets up for sure, right? But unfortunately, what really happened was Credit Suisse, right? Here's another banking problem. Comes out in the morning that their biggest shareholder, who was 9.81%, not going to give them another cent, because why? It just has to do with regulatory issues and stuff, right? Because they need liquidity and stuff like that. But the answer is absolutely not, for many reasons outside the simplest reason, which is regulatory and statutory issues is what the Saudi National Bank said, and that's the reason they're giving. They couldn't help them out anymore. And of course, the market did not like this. Right off the bat, let me tell you, mark this on your charts. You don't have it. It might be irrelevant now, but 385.90, billions of dollars in dark pool prints there. It can act as a magnet, support and resistance, all that good stuff. And that's exactly what happened today. But as you can see, we gapped down, traded right along that line all day long. And then all of a sudden, you see that big move up. Like, wait a minute, what happened? I don't understand. How could this be? And then it's like, bam, Swiss government holds talks on options to stabilize Credit Suisse, and then right after that, Swiss regulators to provide liquidity to Credit Suisse, and of course everybody's like, oh my God, everything's great, it's all good, another bailout, love it. And then of course the market takes off, bam, and shockingly, I don't believe it, it got us above the magic trend line again. The bulls came in there and magically closed above what trend line? The descending trend line, right? To allow us not to close in that channel, right? They just don't want to give it up. And the amazing thing was, we talked about the credit default swaps yesterday for Credit Suisse and how they were just through the roof, right? Way higher in 2008, okay? And you can see this is the chart I showed you right here. Now look at what they are now. Here's the old chart, as you can see, that is way higher. I mean, it goes all the way back to the dot-com bubble. Look how high it is. That is crazy, right? Look at it today, up over 102%. Look at this chart on the daily. It is a straight line up. Look at that. People are rushing in. Banks are rushing in to buy insurance. And if you get anything out of this, guys, please hit that like and subscribe button. I really appreciate it. And if you're new, think about subscribing. If you like this content, I really appreciate your support. And cover their investments, because they're like, holy cow, right? This is, well, most likely it's, are people going to lose money? And because of all the bailouts, probably not, right? I mean, that's just the way it is. And we were talking this in the Discord. I don't know. The only way I can explain the way I feel like the market is now is because, you're trying to compare to old times, and if the Fed pauses, what happens, and all this stuff, right? But it's like I said, to the members, it's like, look, first of all, you didn't have zero DTE options running the market. You didn't have as much manipulation from the market makers. You didn't have a ton of retail in all these other times. And more importantly, bailouts just wasn't the norm, 10, 20, 30, 40, 50 years ago, right? 408. 08 is what really started this whole thing of, we'll just bail them out, right? And the government, as I showed in charts, just took over the market, like all the markets, just took them over, right? And look how fast they are swooping in to save these banks now. In 08, that was the problem. They drug their feet. They said, oh no, they're too big to fail, we're good. They didn't realize the amount of corruption. So now, of course, what have they created? They've created a monster, because now these bank executives know we can take all the risk we want. They will always bail us out. And the worst thing there will happen to executives, they'll walk away with a golden parachute, millions and millions of dollars. They'll sell their stock, just like Silicon Valley Bank CEO did, and get away with it and go sit somewhere on a beach, right? That's it. That's the worst case scenario for them. Maybe we get lucky and they do a stint in, some cush jail or something, like Bernie Madoff did, right? I mean, he was in a paradise compared to, they ain't going to Sing Sing or nothing, right? Or Leavenworth. They're going some cush deal, if that, the worst. But most likely, just losing their job, walking away, and then they'll get another job they wanted. But they don't need it because they'll have hundreds of millions of dollars, right? But that's what they've created. That's what our government has created, unfortunately for us, right? And so, what do you do with that? As somebody said in Discord, you just run with the manipulation. You know it's manipulated, use it to your advantage, right? That's the way it is. And I know a lot of people are waiting on that news to come out, just like it did Monday, right, for all our banks here. And so, as soon as it hits, here we go. Up you go, like nothing ever happened, right? And so, but at least, the analogy I used was, let me know in the comments if you got something better, is I feel like, 'cause I've been to Grand Canyon, and there's always that one kid that doesn't listen to their parents, and they get too close to the edge, and they're looking over the edge, and they start to slip, and the parents will grab them by the collar and say, come back here, stay away from the edge, right? And then they'll get back over there, and they'll grab them again, and then eventually that kid gets too close to the edge, and they go to grab that collar and it slips. I feel like that is the system, especially the banking system right now, the financial system. I just feel like that's what it is. Like it's just hanging over this cliff, and eventually, the Fed, although the governments running that world, just aren't going to be able to step in and save it, right? That's kind of, what I feel like. Let me know if you got a better analogy than that. But, that's where we're at. So we'll see where we open tomorrow. So you saw the SPY. I will say the only trial show and the stock that's most interesting is Meta right now. Watch Meta because, obviously it's approaching that trend line I told you about, which goes back to 2013, right? And so if we do get some bullishness, even though Meta don't seem to care whether it's bullish or not, it's got a lot of strength, it's moving up, but also watch to see if this double top plays out. That's what you need to watch for. It would be a nice little drop, but right now it's got a lot of strength. And so let me know what you think about Meta down there in the bottom. But what I'm going to close out with is this right here, is how we're doing, right? And this report comes out quarterly, right? So it is delayed, right? But, at least you need to understand what's going on with us, because you would think the sky is falling and stuff. But that's just not the case right now. It can always change and turn. But, what I'm about to show you, these charts and pictures I'm about to show you, I can say 1,000 words. You can look at it and go, oh, okay, yeah, we're still doing good right now, okay? And so when you look at this is total balance by delinquency status, right? And so all I care about is 90 days and 120, really. But when you look at this, you can see going from 30 all the way down to where it's severely delinquent. What do you see happening? On everything, you still got this curvature going where it's pointing down, right? There's no move up right now. And the 30 days, they are basically about the same, slightly increasing. 60 days, slightly increasing. Everything else is relatively the same for the last, a bunch of months, actually. And so what you're looking at, and this is the 30 to 60th day range right there, but what you're really looking at is just for a curve up, because, you can look at 08, back there, you can see what's happening. Boom, you get the turn up on the 30, that trickles down to 60, that trickles down to the 90. You see it grow from, the 60 all the way up to severe delinquency, how much it grows, right? And right now, we're just not seeing any of that right now. Not saying, you see how fast it happens, right? I mean, it can happen fast. So this is what we're looking for. I'm just looking for one point to start moving up, but we just don't have that yet, right? At least going through Q4 of last year. So we'll have to see, obviously, we end this month. We'll get this about April, maybe mid-May. So we'll see. I mean, things change. And so we'll pay attention to that. But then here you go, percentage of balances, 90-plus days delinquents by loan type, right? And, of course, why don't you really see this happening? Because it's right here, student loans. We still don't have to pay them. We don't have to pay them until June, or at least when the Supreme Court most likely will strike down the whole forgiveness thing, right? And this is your third largest bill. And so when that comes back on the table, we're going to know a whole lot about how the consumer, that's us, is obviously doing, right? Because you have to pay between $200 to $500 more, maybe more if you got multiple student loans in the household, then yeah, that's going to put a crunch on the people pretty quick. But look at mortgages. I mean, there's nothing going on there, right? Nothing going on 90-plus days. Even credit cards, you got a little point up there, but I mean, nothing major to see right now. And when you go over to number of consumers with new foreclosures and bankruptcies. All right, this is another one to watch out for because supposedly, we're supposed to have this huge crash and stuff in the housing market, and that's what we're going to look for. But, again, this was the biggest housing crash we ever seen back here. And then when you look over here, right, these are foreclosures and bankruptcies. And you just don't see a whole lot. I mean, when you look at that, sure. But, I mean, it's just nothing really major. Right now, there's just nothing to go, oh my God, the consumer's falling to pieces. And it simply does. It has to do with, and people hate hearing it, but it just has to do with we have a different type of job market. That's what's going on. As long as you got a job, you got bills. Oh, wait, people lost jobs by the thousands that we'd never seen before. The banking system was collapsing. All right, the real estate market never crashed in the history of this country. Crashed and burned, right? Now people are sitting on just so much equity. It's insane at low interest rates, right? So that's the one thing you need to look at. And, again, the banking system, I mean, I guess they can keep stepping in, but as long as the government wants to provide liquidity, the stocks themselves might be hurting. But as far as the financial stability, as long as they keep doing it and backstopping it, and you can print as much as you want or whatever, however they're going to be providing this money to them, hey, I don't know what that's, to me, you're kind of just propping up a dead horse. But again, maybe somebody will come in again and buy Credit Suisse. And, and I was going to show you this right here. This is the list of banks that the system deems most valuable, right? If something happened to them, it would just be a hot mess. And you see like JP Morgan right there at the top, Bank of America, Citigroup, a lot of these. And if you go down there, there's Credit Suisse. It's one of them, right? The ones that falter here are regional banks. It wasn't a major bank, but Credit Suisse is a major bank, so that's something that, everybody's looking at. And so, again, the stocks may plummet, but if the bank continues to function, and they've had outflows like crazy right now, my thing is, like, I understand they don't want to let it fail. I get that, but aren't you just telling them just do whatever you want to do? There is no repercussions, right? Isn't that what you're doing, basically telling the executives? Am I wrong on that? So again, I don't know. I'm not sure on Credit Suisse like how other countries do as far as what's insured or whatever. Like here in America, 250K is plenty to insure up to. They can always bring it rating up to 400,000. But again, it's not about us. It's not about the consumer, right? Our stuff is normal everyday Americans' accounts are insured supposedly, right? They're looking out for the bigger folks. That's just the way it is. And so somebody made a great point. Said, well, that was that Silicon Valley type bank. Like, what if that would have been some bank in, I don't know, in Alabama somewhere in some other town, like where they really have rushed in to try to save it or whatever, and then back to everybody's accounts above 250K. That's another question. Or are they just protecting their friends? So it seems like we're kind of getting into that. But let me know what you think there in the comments, guys. And I'm going to be out of town, off the grid for tomorrow. I'm leaving. So Thursday, Friday, Saturday, and I'll be back Sunday. So we're going to be camping on an island, so that's going to be fun. Spending time with the family, hopefully have good weather, and maybe I'll have a nice tan and not a sunburn when I get back. So hope you guys have some good days. I'll be off the grid. I'm not even going to try to pay attention to what's going on, and I'll see you guys hopefully Sunday.